New methodologies and technologies are transforming the energy industry, but what of the efficacy of these services and techniques and the risks they pose? How is the industry coping with these emerging exposures? We spoke with John Heft, a Senior Vice President and Director at New Day Underwriting Managers, which specializes in environmental and construction-related professional liability cover. Here is what he had to say.
The types of environmental risks that are typically covered by a standard energy GL policy are both on the site side, or the operators and non-operators of wells, well portfolios, which can include tank batteries and also collection lines and pipeline type of risks, as well as the waste lagoons and the disposal wells that they would use in association with that operation. On the contracting side, it would be any type of potential contracting operations that that contractor's GL may cover. Well, obviously of the past few years, the latest and fruitful technologies out there, hydraulic fracturing, where they go into the ground, go into the rock formation, and then directional drill. They turn the drill bit horizontally to get into the formation, fracture that rock by putting in an explosive device and then pumping in water with some trace chemicals to extract the oil and gas. What that has done, that obviously for that that operation, there is that potential that once they're going through the aquifer layer, it's sealed with cement, but there is that potential for possible migration pathways that are created as a result of that directional drilling and the chemicals that are in that formation getting into the groundwater, etc. Well, what we've, as I discussed today in one of the energy exchanges, we talked about environmental insurance. And right now, and historically in the energy marketplace, environmental coverage is available. However, it only provides coverage for sudden and accidental occurrences. So if you have a spill, some kind of a release, there's a rupture, it would typically be picked up under that type of insurance. However, with now the new advancements in technology, the disposal technologies that have come to the forefront, there's an increase in gradual pollution exposures, which are not covered under the energy general liability policies because they limit coverage again to sudden and accidental. So as a result of that, in the environmental marketplace, there are coverages out there that are being adapted to the oil and gas industry specifically to pick up that gradual exposure. What risk managers can do today to mitigate their environmental exposures, is make sure that the technologies they're using and employing are conducted and administrated properly. They can mitigate their exposures both contractually, when they're contracting with consulting firms, contracting firms to do the actual work. Everything from clearing land to putting in the well pads to laying the pipe, etc. To when they own, if they own operating, non-operating well fields, to employ the use of standalone environmental insurance. We are seeing in our industry more and more lenders and private equity are requiring, and we're even seeing it on some of the master services agreements where gradual pollution coverage is required to be covered.
For more of our coverage of the 2015 IRMI Energy Risk and Insurance Conference, visit the RIN TV On Demand Library.